Welcome to the Scholars Learning Classes. In this video, we will be studying about the entries for realization of assets and liabilities. First, let's study about the entries for realization of assets, right? When assets are sold, in that case, cash is coming, so cash or bank account debit to realization account. When these assets are taken away by partners, so in that case, partners capital account, because it is taken away by the partners, so partners capital account debit to realization account. Right? Now, let's suppose if an asset is given away to a creditor, it is given to a creditor. In part or full payment of his dues, the agreed amount of the asset is deducted from the claim of the creditor and the balance is paid to him. No entry is passed for the transfer of the asset to the creditor. Let's suppose if an amount due to a creditor, we have to pay rupees 1 lakh to a creditor, and he agrees to take stock of book value rupees 80,000 at rupees 70,000. So in that case, we are giving stock of 80,000 but at 70,000 to the creditor. So now we are liable to pay him the remaining amount of 30,000. So no such entry will be passed for 70,000, whereas only one entry will be passed when we will pay the liability of 30,000 to him. That is realization account debit to bank account, because we are paying him, so bank will be credited of what value? 30,000 and 30,000. Entries for the payment of outside liabilities. See, when liabilities are paid, so we are paying the liabilities. In that case, realization, everything will be done through realization account debit to cash or bank account, because we are paying them or we are giving them. When partners agree to take over liabilities, in that case, the entry will be, apart from cash, there will be a partners capital account. Same entry to partners capital account. That's it. Now there are certain realization expenses. So for the payment of these realization expenses, what entries will be passed? Now when expenses are paid by the firm, right, in that case it will be realization account debit to cash or bank account, right? Then comes when expenses of realization are paid by the partner on behalf of these expenses are paid by the partner on behalf of the firm. Same case, it is being paid, so realization account debit to partners capital account, right? When the firm has agreed to pay a fixed amount to partner towards realization expense, and the partner has to bear the expense. Now what firm is doing? Firm is paying to the partner. These realization expenses. Now partner will see himself that how he pays these realization expenses. So in that case, realization account debit to partner's capital account, because these will be paid by the partner and the firm is transferring to him. When realization expenses are to be borne by the partner and the expenses are paid by the firm, the realization expenses paid on behalf of the partner by the firm. By firm. Now partner has to pay this realization expenses, but firm is paying on its behalf. In that case, partner's capital account will be debited to cash or bank account. So this entry will be passed in the partner's capital account. And there will be no entry passed when the partner has to bear these expenses and he pays out of it pocket, right? And if nothing is mentioned that how the realization expenses are paid, so in that case we will assume that the firm has met the realization expenses. So this first entry will be passed if nothing is given about the realization expenses. I hope you like our video. Please download our Scholars Learning app and enjoy the learning experience with us.